seen, of course, that the NSE 20 share index has declined by 1.49%. What do you think has informed this particular drop?
So we have seen the market indices really come off, both NASI and NSE 20, and this is primarily driven by the continued foreign sell-off. And two factors come in mind on the macro level. That's currency. There have been suggestions by the IMF that the currency overvalued by 17.5%. So we're getting some foreign investors who are getting cold feet around that, and also the debt burden, which the country is also trying to manage at the moment.
Okay, and when we do talk about the shilling, of course, we did see it last week hit a 10-month low when it comes to the rate to the dollar at 103 there. So definitely there is some sort of issue with the weakening of the shilling, as you have put it. But let's move on from the index now to the top movers. We're seeing NIC Bank Limited there as our top mover with about just over 2 million in terms of volume.
So NIC Bank are scheduled to release their Q3 results in the coming week, and some investors are speculating because if you remember the last results in Q2, they weren't so impressive. They're, they're the only bank of the top banks which recorded a decline in profit, -2%, and this was largely due to weakened fundamentals. ROE was down, depressed, NIM. We also saw this cost-to-income ratio rise by 450 basis points, and then non-performing loans also rose up to 13.1%. So what we are seeing is investors trying to speculate. Since then, we have seen prices go down for NIC. So some investors are speculating that results might be a bit better and are trying to buy into the counter right now, while others are selling off in anticipation of poor results come Q3.
Okay, so as we've seen, they're not either one of our losers or our gainers as of this week. So you say this movement is mainly due to speculation. But let's now move on to the top gainers. We're seeing Trans-Century there, and it's quite a hike of 10.17% compared to last week. One of our top gainers there. What do you think happened here?
So Trans-Century managed to roll over part of the debt it's owed to one of its major shareholders, Kuramo Capital, and this was moving debt primarily from short-term to medium-term to the tune of around 0.3 billion, moved to short-term, whereas in the span of 4 years, which the medium-term, they moved a significant portion of that debt. So moving that debt or refinancing that debt has caused some relief also on pressure from Trans-Century, and investors are seeing this as a positive step towards reviving the investment company.
So it is prudent then for them to have taken this step?
Yeah.
Okay.
Sure.
All right. Now, that was one of our top gainers, the greatest one, actually. Let's move on to the top losers now. We've seen EA Portland Cement there. It's taken a downward turn of 9.97% compared to last week. Of course, we do know they need a bailout. They need 15 billion shillings. And so is that reflective, of course, here?
So EAPC released half-year results this past week, and there was a 25% decline in revenue. Despite this, we saw PAT grow, not grow, rather it was positive. Previously, they reported a loss, so PAT came in at 7 billion, and primarily the reason for this was fair value gains from property, worth the tune of 11 billion. And investors are seeing this as something which is not quite positive, despite the growth in profitability, and this is due to a decline also in cash flow from operations. It declined massively from around $500 million to 1 billion. So investors are quite they're quite skeptical about the prospects of the stock.
Okay, all right. Now let's take a look at Kenya Power and Lighting, the KPLC as well. It's gone down by 8.86%.
As we know, they were to release earlier, but they delayed it. And they also issued a profit warning, meaning that they're expecting less profit from what they had recorded last year. Coupled with this, we know they have been having management issues, one of which was the defunct transformers they bought last year, which were found not to be working. So investors in the market are really anticipating bad results tomorrow, or weakened results rather, from what they had really posted last year.
Okay, so perhaps, of course, time will tell as to where that particular situation goes. But thank you so much, Patrick, for shedding light on these. For now, though, it's time for Markets 101. Okay, so now we are going to take a question from the streets. Let's take a look at one of the questions that has come in, and our financial analyst Patrick is going to answer that for us.
My name is Bill Jordan Majani from Trans Nzoia County. I'm really not conversant with what happens at Nairobi Stock Exchange. I would like to know what is share trading.
Thank you for the question. To understand share trading, we must first understand what a share is. A share is the ownership of a unit of a company. NSE basically facilitates the buying and selling of shares in different companies, and this is what we refer to as share trading.
All right, that was share trading as explained by Patrick Mumudeo. That was our question of the day. But now it's a time for the NSE historical facts.